Hey everybody, Courtney Smith here with our Wall Street winners for September 13th. Some pretty interesting action going on here. Oh my God, this is so interesting. It's amazing. All right, so Friday was pretty crappy day in the market. No question about it. We had a normal dip as we expected. But as I've told you about seasonality, I told you last week that we would dip. Did I expect a big drop on Friday? No, but I did expect a dip, and I told you about it last week. Momentum divergence, the green line, the purple predictor is starting to break down. But stick with me, stick with me. We're going to go through our unique indicators and come up with a conclusion in a few minutes. So, down. Notice back here, a month ago, down. Couple months, months before that, down. Okay, normal correction. Is it going to be a bear market? Hang on. Let's take, went too fast. The Dow, lots and lots of selling pressure came into the market. Buying pressure completely died. We told you the Dow would be the weakest, and it is. It actually broke the previous low here. So technically, it's in a bear market now, whereas the S&P is still in a bull market. Now, the amount of selling, take a look at this little red line in the upper right-hand corner. That's getting close to these highs up here. It's as high as these. When we see selling pressure this high, it's not sustainable. Notice we got selling pressure a little bit higher, immediately came down. Selling pressure a little bit higher, came down. We're at this selling pressure, immediately came down. This is not sustainable. Well, we could go another day or two, I should say, with high selling pressure, but we can't go 3 days. So we're actually closer to the bottom of this little dip than we are to the top. How about the NASDAQ? Looks just like the S&P. Purple predictor, very poor. Seasonality, still neutral for sure. Over here, the seasonality for the utilities, still bullish. I mean, they're holding up. They're not going down. They're not going up, but they are pretty stable right now. So we'll stick with our small position there. Now, this was exactly what we were telling you. Here's the dip. We told you last week. You got to pay attention to your Uncle Courtney. But here's the thing. So the purple line is probably the best one. You can see that as we go through these last 2 weeks of September, we could be under pressure. Then we stabilize, then we rally. So far this year, it's followed this pattern exactly. So I think we can probably have a little bit of pressure here for, let's call it another week, something like that. And then we'll start to see some stability come in. And then, of course, the last quarter of the year is going to be a very good quarter for the market. Now, a lot of you are saying, yes, but the economy's slowing down. Yes, that's true. That's why I'm bullish, because then the Fed will not taper. The market will start to realize the Fed will continue to remain very easy longer than they had, and the market will perk right back up again. Now, we got just above our asset allocation line here, and then we failed. Money left the stock market, went back into the bond market in order to get a safe haven, someplace safer than the stock market. Also, we've been seeing risk come out of the market as well. We're seeing the risky traders, the meme stock, the GameStops, they're not trading quite as much. However, we see here that we had made new all-time highs in global shares, and then Friday was not a pretty day for them either. The yield curve, really, I feel like I'm repeating myself, so I won't. It's getting slightly bullish. Now, bonds, different story. I think we're about to crack bonds. I think bonds are about to crack. I've got, for fully paid up members, I have an order in. We're going to get short the bonds. So inflation's still a problem. Not only inflation, we're actually going to go into stagflation, something we haven't seen since the Jimmy Carter administration. And Biden's policies are in many respects mimicking Jimmy Carter's policies. So I'm looking for stagflation. That's not good for the bond market. The bond market is going to collapse. We're going to go back to the lows on this chart. That's a pretty darn big move here. Here's our factors. All of them, except maybe gold, are saying that yield should go higher. Gold is saying yield should stay the same. But 10-year treasuries in Germany, commodity prices, all pointing up telling us that yields are going to go higher. Dollar pretty stable over the last week, and that means that gold also pretty stable over the last week. I want to buy it when it breaks these highs. We got right there, but haven't broken through yet. So, but I think if we can get above those highs with the inflation we've got, with ideas that the Fed will start to ease again, that won't come for another week or so. I think we can start getting a big bull market again in gold. Our indicators, though, switched from bullish last week to neutral this week. All of them are neutral. Crude oil, stable. I think we'll stay stable with a slight bullish upward movement. I don't see a lot of opportunities here in the crude oil at this point. Bitcoin sell off. I think the best strategy, we've been bullish for some time. I think the best strategy is to do nothing right now. This is a pretty strong down move that we had early in the week, and we're still drifting lower. So if you got in when we told you to get in, let's take some small profits on the position. Purple predictor starting to also look pretty bad. And it was one of the big reasons why we got long earlier and made good money, is because we're looking at the Bitcoin market in a completely different way than everybody else is, because we are using master technical analysis. All right. Thanks, freebies. Love having you here. You know that. What the heck? You're special to us. Of course, you should go to Stock Success School to learn how we do it all. I'm boring. Let's keep on.